Good morning and welcome to this weekly market update from MRC Markets. Today is the 28th of July 2014. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss, Aussie and gold. Just going to review what happened in the markets last week and give some sort of outlook for the week ahead. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple moving average, and the gold is a 200. And I'll not make any trade calls or recommendations in this video. You do trade your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com, that would be most appreciated. Okay then, so let's have a look at the Forex calendar for the week ahead. So I've just got Forex Factory up here, so I'll just have a quick run through here in terms of the high impact data. So today at 3 PM with the US pending home sales month-on-month figures. Tomorrow at 3 PM, this is GMT, you got the US consumer confidence month-on-month. On Wednesday we have the Eurozone Germany, the German preliminary CPI month-on-month figures at 1:15. You got the US ADP non-farm employment change numbers, and at 1:30 the US advanced GDP quarter-on-quarter, another big piece of data there. And to finish off Wednesday of the US, the FOMC statement. And of course the federal funds rate, which comes out at the same time, but that's expected to stay the same. On Thursday overnight, for any of you that trade the Aussie, the Australian, the building approvals month-on-month figures. At 10 AM you have Eurozone CPI, this is the flash estimate year-on-year. At 1:30 you got Canadian GDP month-on-month this time. And we also have the weekly US jobless claims there. And on Friday, quite a big day overnight, you've got the Chinese manufacturing PMI, you have Australian PPI quarter-on-quarter. You've also got the Chinese, the HSBC final manufacturing PMI. At 4:30, you got the Bank of Japan Governor Kuroda speaking. At 9:30, UK manufacturing PMI, and at 1:30, the big number is the US non-farm employment change numbers. So we're expecting 230k is the forecast. The previous was 288,000. So big numbers there. Also, the US the unemployment rate comes out at the same time. That's expected at 6.1%. And to round off the week of the US ISM manufacturing PMI numbers. So above the 50 benchmark is the forecast, so 56.1 there is the forecast number. So quite an interesting week in terms of data. No sort of rate decisions or anything, of course. It is the last week of the month, and also halfway through the month we do get the start of the week as well. Well, on Friday is the first. So okay, let's have a look at the chart. So what is going on the euro dollar in terms of the weekly chart? So last week's weekly candle, remember a couple of weeks ago we had that the test, so we closed below the 50-week moving average. We came back up, retested it, and we've started to slide down. So a lot of dollar strength here on the euro. But you can see we're currently testing the 200-week moving average here on euro, and we are currently above it. So it looks like we're going to get some sort of brief sort of bounce here. You can already see us trying to bounce already on the euro today. So in terms of the fibs, what we've been speaking about, it's all about this fib here. And the reason it's that low, first of all, it's because it's the low of 2013, but also remember this move here. So the low of 2012 to the high of 2013, lovely uptrend, retracement down. You can see the sort of 50% and 61.8% retracement zone. This got bought up, so we're just taking the low of that move. You can take that one there or that one there, but I think that candle there is the low, and that is the high of 2014. So as we've been speaking about, because remember we started to get some support at the 38.2, which was around here at the 135 handle, but you can see we got the brief bounce, and that's why I'm posting on these videos. I think it's good to keep it nice and simple in terms of 50% and 61.8 in terms of the fibs. I personally think they react better. You get a bigger sort of bounce. If you imagine it's a sort of trampoline, the higher you come down, the higher you come up, and the lower you come down, you tend to get a bigger sort of bounce. That's the way I see it. And yeah, and they just tend to act a little bit better in my opinion. I mean, you can see at 38.2 there, you got a very brief sort of bounce, and it just failed, and it rotated. It's starting to rotate toward the downside. So the 50% comes in at one spot 33.698, so pretty much 133.70s. And in between that, you have the 133.50 handle as well. So let's keep an eye on that one in terms of going into the week. Also, that lines up nicely with the 100-week moving average as well. So if it does continue to grind low this week, I mean, I personally think this week, just purely in terms of looking at the weekly candle action, I reckon you may get a brief bounce up here. Maybe towards half the way of last week's candle, then it just continued to slide down, form a bit of an upper wick, and come down to around this 50% 100-week moving average level, which could be very interesting. I think we should get some interesting price action if we do get there. Also, bear in mind it was previous resistance around here to the left as well. So that's the view on the weekly. In terms of the daily chart, a very similar thing. I mean, 135 is a very key resistance level, I think. Well, was previous support. I would not be surprised to see it act as new resistance if we do get a bit of a bounce off of that 200-week moving average, and keep an eye out on that 135 handle. And that's pretty much, well, in terms of sort of other sort of key levels to keep an eye out for, in terms of sort of 50 pip increments, we are sort of around the 134.50s at the minute, so that's another sort of key level to keep an eye out for. And then you've of course got 134s as well. So in terms of sort of intraday trading, I mean, you can see they've just been acting really well. So you've got that nice spike there, you've got that spike there. I wouldn't be surprised to see it pop up, spike this 134.50 and perhaps come down. So, but in terms of fibs, there's nothing sort of major on this daily. I mean, if you're looking at, if we do get a more of aggressive retracement, that'll be one to keep an eye out for. I thought a lot of people, I assume, will be looking at this one here. That's a sort of recent swing high. That was a 38.2 as well, which was sold off of there. So that 50% comes in at one spot, 35.60. So also the another 50 pip level you have to keep an eye on, 135.50, I think. So that comes in just below that 50% there. So that's the view on euro dollar. Nothing major to keep an eye out for. I mean, you just need a bit of a retracement, I think, and then I personally think it's all about selling into any sort of bounce it. I think that would be a very sort of popular strategy going into this week. But in terms of the fibs, they're the big fib moves, in my opinion, to keep an eye out for. Cable, in terms of the weekly, we're starting to get a nice retracement now. So 3 weeks in a row we've had red candles. Last week's candles are much more aggressive retracement candle. What have we been speaking about in terms of this weekly? Well, I mean, first of all, if we do get a very quick retracement, this is the big fib to keep an eye out for. But of course, we're a long way away from that. I mean, that 50% comes at 160 level, and we're currently at 169.70. So a hell of a long way away from that. But do keep it in mind in terms of perspective. But in terms of the smaller fib dips, we've been looking at these ones here. So you've got that move there, that mini dip there. So the next one now, in my opinion, is this small one here. And we're getting closer and closer to this level. You can see it clearer there on the daily chart. So recent swing low where we bounce off of fib to recent swing high. We're currently testing this interesting previous resistance level, so we could act as new support as we speak. So that sort of comes at one spot 69.70s. But I think it will be healthy for it to come down to this 50% level here. See it come down about 30 more pips, I think. I mean, we may get a brief bounce off of this level, and then maybe it may get capped to the 50-day moving average and then come back down. I do think it will come back down because it's been playing these little fib dips so nicely. You can see here on this daily, really nice action here. So you had that move there, bam, that move there. Just really nice action off 61.8, and then this one here I think was off the 50% as well. Lovely action. So it's just really playing the fibs nicely, so you have to keep that in mind, I think. So yeah, I would not be surprised to see it come down and test this 50% level this week, and that is the key move to keep an eye out for, I think. So let's say if we do come down to that 50%, or we do get a brief bounce up, then The fib towards the other side, I think, is this one here. So that's the reason. So it's pretty much the high of July to the low of July currently. And of course, if it does make a new low, then keep an eye out on that and just extend your fib down. But this 50% here comes at one spot 70.76. So in terms of any sort of 50 pip level to see if it acts any sort of confidence, and I suppose your 170.50s. And then 171s comes in just below the 61.8 retrace, so keep an eye out on that as well. And that's pretty much it on cable. So in terms of the 4-hour chart, in terms of smaller term time frames, I mean, yeah, you could look at that move there maybe, but I don't know. I think it's easier and safer to get. I mean, because on these daily charts, the fib's been playing out so nicely. So in terms of fib moves, I personally, I mean, you can look at these smaller 1 hour ones here. So you had this one here, I think. Actually, no, I didn't even test the fib. I mean, I personally prefer to look at the round numbers instead of looking at smaller fibs, because you can see they play out so nicely. So 170.50 has been acting as really nice support there and resistance, and 171. So instead of looking at the smaller fibs, I personally prefer to look at the round numbers, because they just play out so well. Big option expiry levels, so price always does tend to react at the levels in terms of sort of intraday trading. So that's my view. Anyway, let's look at the dollar Swiss chart. So this is the weekly, and what have we been speaking about is this fib move here. So the low of the year to the high of the year, and bam, we've had this 0% taken out now. So after that weekly reversal candle, that was a few weeks ago, remember, we've just grinded higher and higher. We've now had a weekly candle close above the 0% line. So that 0% line was 0.9036. And now that 0% line, I think, should act as interesting support there if we do get any sort of retrace. So keep an eye on that in terms of key level. So yeah, I'm just going to draw a nice, just a brown level there at that 0% line. Then you can delete the fib, but definitely key level to keep an eye out for in terms of any sort of like support resistance level, where it should act as new support now, I think, because it was acted as previous resistance. So if we do get a little mini sort of retracement, of course it's not that far away from it, then do keep an eye out on that. So in terms of new fibs, of course what we've been speaking, so I've just flipped it to the daily. We had this one here played out very nicely, so that's a smaller fib within this bigger fib move, so that's played out. So in terms of picking new lows, you could then look at that one there, or safer would be that one there, but it's all about just keeping an eye on the price action. I think that one's quite interesting actually, because we do have previous resistance at this 0.8951, which of course is coincides with a nice round number, sort of option expiry level. So I'd keep that on your chart. So yeah, nice previous resistance multiple times. So, and also it lines up with sort of moving average as well. The 50-day moving averages coincides that level. Actually, I need to move the high on this one. Yeah, that's the high there. So yeah, 89.53, 89.54 is that move there. So that's, well, I mean, that is really the way to play it, to be honest, because the low of that is the 50% low of the previous move. So that's very, very technical there. I personally look at that low there, but it's all about just seeing how the candles react, to be honest with you. So they're the moves towards the upside. In terms of fib moves to the downside, you have to sort of flip it to the weekly really, and it's quite tricky to pick a swing high. I mean, obviously this is an obvious swing high to keep an eye out for. So that's the fib high of 2013 to the low of 2014, but of course we're still a long way away from that. And that 50% comes in at 0.9268. So yeah, I mean, that move there is pretty much done and dusted. I mean, yeah, you could draw a 78.6 or 88.6 or whatever to look for resistance. But then in terms of, I mean, a lot of people may be looking at that high there, but I think it's nice to keep it nice and simple. The bigger moves do tend to act better in terms of the levels, in terms of 50%, I think. So that's really the fib move towards the other side. But I'll keep an eye on the price action in terms of these smaller, these sort of swing high fib moves here. So that one there, that one there maybe. yeah, but I don't know. I personally prefer to look at the round numbers really here in terms of sort of if you're looking at resistance, and a great one to speak of is currently right now. So you've got 0.9050 in terms of intraday trading. Classic sort of price action. You can already see if you just flip it to the sort of the 1 hour 15 minute, you're already getting interest in action at that 0.9050 level. So in terms of intraday trading or looking at any sort of resistance, then that's the way to do it, I think. But in terms of the weekly candle, last week's weekly candle very, very bullish. But I would not be surprised to see some sort of brief retracement on here. But then again, it could easily just continue to fly up here and grind higher towards these sort of key moving averages over the next couple of weeks, where we've got the 200 and the 100 there as well. But yeah, that's the view on the dollar Swiss. Let's look at Aussie. Surprise, surprise, Aussie's still chopping around, still not being very interesting, unfortunately, on this weekly chart. You can see the key levels we've been speaking about are the 0.9450 level, key resistance there, and then that's where I suppose the key support is still this, but we haven't come down here in a while, so 0.92 handle on this weekly. So yeah, still chopping in between that 250 pip range on the weekly. So nothing major to talk about on that weekly chart. It's pretty self-explanatory, as you can see. In terms of the daily chart, the same two levels really. You can see we had that nice reversal a few days ago, and we started to grind a little bit lower. In terms of sort of fib moves, remember we were speaking about this move here. That's acted as nice support last week. I think that was on Monday. And then in terms of the 4 hour. Quite choppy, but the other move to keep an eye out for, which is currently in play, is this move here. So that swing low there on the 4 hour to swing high. You can see some moving averages chopping around here. We're sort of just above the 61.8 level as well. So keep an eye out on that. But yeah, pretty messy, pretty choppy. I think there's more interesting charts out there, to be honest with you. I'm personally keeping away from it because I think it's just quite slow, quite choppy, not much volatility here. So more interesting ones to look out for, and that's pretty much the view. I mean, unless we get a break either side, and I do still think it will break to eventually break above the upside here at 0.9450 and grind higher towards that 100 moving average. But you never know, it doesn't have to. It could just retrace and then play this sort of fib move here first before rotating higher, or it could just keep on grinding lower. But I mean, if you look at the monthly chart, last week's monthly candle is quite a decent bullish one, sort of continuation pattern. And perhaps it does want to come up towards this 50-month moving average. Also, this is a sort of nice sort of fib play. Well, not quite a fib play, but it's a lovely uptrend, retracement down, and it does look like it's sort of grinding higher. So the bias is slightly towards the upside, I think. But in terms of this, the current levels is not that interesting, I don't think. Not as interesting as gold anyway. What's going on? It's still all about this fib move here. Very self-explanatory if you look at the chart there. Lovely action at this the 1292 spot 68 level. Also got the moving averages here on this daily chart. The 50-day moving average has crossed up above the 100 days, so a lot of people will be seeing that as a buying signal, and it does coincide nicely because this is a bullish fib. So lovely uptrend, retracement towards the 50%, still getting some nice action. So remember we had that that action there previously, a brief bounce up. Then it came back down to 50%. Lovely sort of reversal candle there. I think that was on Thursday. But yeah, it is actually starting to retrace again. It is sort of making lower highs here. So it is struggling to pop up. But I would not be surprised to see it pop up because I think it's just lots of confluence here. And you can see as soon as it comes to this level, buyers immediately come in. So I'd not be. I mean, in terms of the weekly patterns, I'm just going to zoom in here. You can see it does it nice. I mean, yes, last week's weekly candle was a red one, but the lower wicks is still coming in here. So I'll not be surprised to see it form another sort of lower wick. I mean, it potentially could come and test this 50-week moving average again, form a lower wick, and then grind higher again. But yeah, I mean, it's all about the 1292, the key line in the sand this week. And you can even see this current daily candle low wicks already forming. So I personally think it'll eventually grind higher. But yeah, it does need to break this sort of this mini sort of trend line resistance here. You can see on the 4 hour there as well. But in fact, the previous 4 hour candle was quite a reverse one. So maybe it will come back down to 1292. It's quite a tricky one, that. Best just to sort of personally wait for it just to come down to level and then see how the action turns out, see if you get any sort of buying opportunities there. Okay, then that's all for today. Hope you found that video useful. If there's any other pairs that you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great week trading, and I'll catch you next Monday. Thanks for watching.